Obviously, investment is asset or item acquired with the goal of generating income and or appreciation in that asset. And one thing to remember, which is very important, is that the responsibility always lies with the investor. The Colombo Stock Exchange itself is a company that has been incorporated by guarantee. It's the only national infrastructure for trading equity in Sri Lanka, and is essentially governed by the Securities and Exchange Commission as the regulator, the SEC. The trading system that we use is referred to as an automatic trading system, ATS, where price and time are the primary factors for trades to essentially take place. So you input based on price and time, and the settlement or the buy sell of the transaction takes place on those two bases as being considered. You have a primary market and a secondary market for shares. A primary market is referred to the IPO market, where the general public can subscribe for a company issuing new shares. And thereafter, once the share is listed, it could trade on the exchange, which is referred to as the secondary market for buying and selling of shares. An opening of an account for anyone in terms of wanting to invest in shares needs to follow a process of opening a CDS account through a stockbroker. And you have to go through a stockbroker. So you cannot have a CDS account directly. You have to essentially open an account with one of those intermediaries, essentially filling all these documents. The exchange has decided to restrict its trading hours, and we currently have just a 2-hour window of trading from 10:30 to 12:30. The transaction cost involved to buy sell shares is also listed here, as you can see. So if you look at the all share price index, just to give you some flavor of how it's moved over the last sort of 12-year period, due to the current economic crisis, we've seen a huge decline. And this is the end of May index down to 8,200. However, today it's even down further to 7,400. So we've had negative returns on the index for this year so far. If you look at the S&P, the story is again pretty similar. This is the more liquid or the top 20 shares that are currently listed. The market cap also has taken a significant beating. 2 years have been dominated by domestic participation. Is that capital? If you look at active accounts, the CDS today has about 650,000 CDS accounts. If you look at accounts that actually have shares in it, it's under 300,000 accounts. So only 300,000 of our population really have invested in equity or are currently having exposure to equity. By end of 2025, to take this number up to a million accounts, it's a fairly significant increase. But we are really going for that stretch target, trying to increase and making sure every Sri Lankan really has some level of participation in equity. So what consideration should you sort of take into account when picking stocks, especially in an environment that we currently face? Number of factors need to be considered, to be looked at before you pick stocks to invest. GDP, growth, your trade deficit numbers, all of that, the macroeconomic environment, and analyzing that is key. We also need to have some clear direction on policy. Interest rates is another factor. Interest rates, obviously, on fixed income gives you an alternative to investing in equity. Interest rates also should play a part in terms of looking at interest rates versus the macroeconomic fundamentals, so inflation. Obviously, the outlook for the equity markets, as well as certain counters, needs to be looked at. So there may be certain sectors that will benefit even during a crisis. If you just look at certain dollar earning companies, they significantly benefited from the depreciation. Also look for stars in a sector, looking at the fundamentals of the valuation. Are these trading at a discount? What is the price earning ratio of these companies? What's the price to book multiple of these companies? Cheaper the company is obviously better to buy, and you would want to look at those things. Figure out your own individual risk appetite. Now, some of us may have a higher risk appetite than others. Some of us may be able to withstand capital losses, whereas others may not. And I think it's important to really figure out what type of investor are you, and then align yourself and buy and sell shares accordingly. So there are growth shares, there are stable, high yielding, high dividend yielding stocks. There are defensive stocks. So again, you need to pick your shares based on your individual risk appetite and investment objective. You also need to very carefully consider the period of investment. We've all heard of higher the risk, higher the return. Stock market is no different. Direct benefits that attribute obviously are the capital gains, the dividends. Sometimes companies do capitalize their reserves and the existing shareholders benefit from that. Companies also issue rights that are to existing shareholders. We've also seen a lot of companies, for purposes of liquidity, subdivide their shares. Indirect benefit shares are still treated as highly liquid because there's always a market for it, and look for reasons for selling shares and taking profit. Realizing your gains. A lot of people get into the rush of investing but don't consider when to exit. Focus on the fundamentals of that share, the earnings, and not just what the index says. A typical approach to invest can be a top-down approach. So what we use is the price earnings multiple or the price earnings ratio, which you essentially look at your profits divided by number of shares. You have EPS, and you divide that to market price to get a multiple of what that share is trading. Lower the multiple, cheaper the share. Your price to book value, I think, is also important here. Lower the multiple, cheaper the share. Knowing where you stand in this portfolio is sort of very, very important. Buy when there's blood on the streets.